Good morning. This is John Colgrove of Cornerstone Financial Team. I hope this is finding you well wherever you're at here. The reason I wanted to spend some time today is because there's been so much negative news about the stock markets here in the last few months that I want to help us think about what comes next. Okay. And this is really important to spend time on because first thing that you need to recognize is that negative news sells. Okay, just do a search on that in Google and you'll see that the number of clicks that negative news articles get versus ones that are positive are just overwhelmingly higher. And remember that online news wants to sell. They need to get commercials. They need to have advertisements. And the way they do that is that they prove to them how many clicks they get on articles they have or videos that you watch. And just for example, on April 9th, of this year here, just 4 weeks ago, we had the second best day in the history of the NASDAQ. The NASDAQ was up over 12% in one day. You have to go back to January of 2001 to find a day that was better. And obviously the NASDAQ was a lot smaller then. So moments like that, I looked at the headline the next day and it read something like this. Market has a reversal of fortunes, or it was like market has a temporary reversal of fortunes. And I was like, hold on just a second. Why don't we just say the market had a record day? It just once again shows you they can't even say what it was. And this is all of them. You know, Fox News, MSNBC, you name them. They have like these 2 to 3 spots on their homepage where they're going to fill them with certain stories. You can go pick them out today. You already know what they're going to be. And then they plug it in. So the reason I say that is because that fear, of course, when people absorb a lot of that news, it makes them afraid as well. And that once again makes folks say, what should I even be in? Do I need to get out? Well, we want to again take a moment and talk about market recoveries and why we stay invested. So away we go here. First thing is that it's really important to take a moment and look at this slide here. Okay, I want you to study this carefully if you would. This is showing what the average bull market is, and bull market is the good market when things are up, versus the average bear market when things are down. Now, I want you to look at the bear market first. The average bear market has a pretty nasty return, minus 33%, ouch, in 12 months. Taking that, let's accelerate that and go back to March of 2020. Y'all took we had about a 30% drop in 18 days in 2020. You talk about fear. The world shut down. Everybody's worried about dying. And the stock market just did this kind of thing. What it's typically taken 12 to 18 months to do, it did it in 18 days. Okay. But take a look above it. Look at the average bull market. The average bull market here lasted 67 months. With a return of 265%. Now, I wish I could tell you that I was such a good financial advisor that I could help you get those goods without the bads. I can't. And anyone that promises you that they can, you need to run because nobody can. Nobody can time the market like that. Now, what we do is we make sure we are much, much more concerned about your market, not Wall Street's. This is really important to know. So if you have things that have changed in your life, if you've had health issues, if you have a job loss, if expenses are higher than what you thought and you're in retirement, we want to know things like that because we are going to adjust how you invest according to you, not necessarily the whims of the market. Because as you see here, to get that good, that 265% return over 67 months, you endure this as well. Okay. Because as you see the blues versus the reds, we don't know when this is going to happen and we don't know when this is going to start. So I'll show you again. We don't know when this is going to happen. And we certainly don't know when this is going to start. But one thing that is evident every time is you'll notice that at the end of a red, the jump to the blue is really nice. It's really good. 2020, when I was referencing there in March of 2020, if you stayed invested at the end of the year, you look down, you never even knew that COVID happened from a stock market perspective. Now, obviously, health and worry and people losing family members, I understand that. But from a purely investment perspective, if you stayed invested at the end of the year, you didn't even know anything happened. It was a great year for the market. What we're going through now, obviously, many things being driven by policy in Washington, and that has made the markets in turmoil, and that's understandable. But it's really important to understand why, when we say stay invested, why we say that. Okay, I'm going to take you through one more slide here, some food for thought. This is one of my favorite slides to understanding, because when folks say, John, why don't we just get out of the market and then get back in? What we're talking about is market timing. But I want you to see this first red bar here. If we missed just the 10 best days in the market in 1 year, just the 10 best days, we lose about half of our returns. And so for that point, as an example, going back to April 9th, NASDAQ was up 12% in 1 day. Delta stock was up, I believe, 24% in 1 day. Amazon, Apple, all of those had wonderful days that day. But the reason I bring that up again, nobody knew that day was going to happen. In fact, it happened in about the last 2 hours of the trading day. So I bring that up to say this. Yes, if you've got anything invested here over the last several months, good chances you've seen losses in there. But then when days like that happen, and we've had 4 to 5 days in a row now of good markets too, the only way to actually enjoy those returns is to stay through it. Okay. And so that would be my favorite slide on that. If you've missed the 10 best days in a year, you've lost about half of the return. So that's a very important aspect to this, to staying invested. Now, again, I'm going to reiterate this. Something's changed in your life. If you've got health issues going on, or maybe you just don't like the amount of volatility still and you want less. In other words, you're willing to give up some of your gains to protect some of the losses that occur, and you just want to make changes that way. Of course, by all means, let us know, because we're more concerned about your market, not the stock market. In the short term, anything can happen in the market. Historically, as we've shown in these slides, historically what's happened is that it's been good when you've held through. Again, I'll just show you this one right here. When you stayed through the market, things have been pretty good. In any event, that's the idea of market recoveries, historical ideas of some of the best markets happen after some of the worst markets. If you have any questions or concerns, of course, call our office. In the meantime, I hope you have a blessed day. God bless you.
The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities and advisory services offered through LPL Financial. Member FINRA, SIPC.